Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Each year in June, the reconstitution of the Russell indexes take place in what's called the Russell Reconstitution. On June 25th, 2021, about $10.6 trillion in investor assets will be rebalanced. Last year, 1.57 billion shares representing $56.7 billion were traded at the close of the Russell Reconstitution. After markets close on Friday, June 25th, the changes become final and the updated indexes begin running Monday, June 28th, when markets open. For the 18th consecutive year, the Nasdaq Closing Cross will be used to rebalance Nasdaq-listed securities in the entire family of Russell U.S. indexes. The rebalance is designed to ensure that the Russell U.S. indexes continue to accurately reflect the ever-changing state of the U.S. equity market and its segments. Joining me to discuss the importance of the Russell Reconstitution to the market and investors is Ed Coughlin, Director of Trading Services at Nasdaq, Catherine Yoshimoto, Director of Product Management at FTSE Russell, Nick Kalivas, Head of Factor and Core Equity Product Strategy with Invesco ETFs and Index Strategies, and Stephen DeSanctis, Head of U.S. Small and Mid-Cap Research at Jefferies. It's great to see all of you again. Welcome back to Trade Talks. And Catherine, I'm going to start with you. Why is Russell Reconstitution so important for the U.S. markets and investors?
Thanks, Jill. Russell Indexes capture market changes that have occurred over the past year. So Reconstitution is an important event to reset the indexes, the Russell 1000, Russell 2000 indexes. You hit on some points there, about $10.6 trillion benchmark to Russell index, of which $1.9 trillion is in passive index funds. Russell Recon Day is historically one of the busiest trading days of the year, with more than $100 billion traded at Recon close in 2020 and 2019, combining the numbers you mentioned for the Nasdaq close as well as the NYSE exchange.
Ed, let's talk about the Nasdaq Closing Cross. How much do you expect to trade? How long does it take a transaction of that size to take place?
So if you look at the transaction, when I go back over time, last year, I think as you mentioned, we did 1.6, billion shares. The year before, I think it was 1.2 or 1.3, so it's been growing. In terms of the cross itself, if you can imagine, there's a collection of orders, all of those orders are disseminated through imbalance data. We start disseminating to the street at 350 so that they're well aware of, how many shares are paired in a particular stock, what the imbalance is, and what liquidities that we are seeking. So, we think, NASDAQ's close is kind of best in class in terms of automated auctions. It's performed really well over the past. And when you look at trading, 1.6 billion shares, you might think, oh, that takes a long time. To put a frame of reference on, it takes about a second. And if you can imagine what's happening is, you are calculating the cross, you're reporting it back to customers, you're reporting it to the tape, the dissemination, you're reporting those things to clearing. So all that stuff takes about a second, which is, pretty, amazing, given the size of that transaction. And what NASDAQ hopes is that, as the cross grows, and as more and more passive investing comes into play, you see that there's confidence in that the markets and, our wonderful liquidity partners and market makers that are out there, can handle such enormous events. And Russell itself does a really good job of advertising what those changes are going to be so that the street is really, really well prepared. And, as Stephen and Nick will go into, people are preparing for weeks for this type of an event.
And Stephen, let's talk about that a bit more. Why is the Russell Reconstitution such a big deal for the markets, for investors?
Yeah, so from Ed's standpoint, I think people have actually been looking at this for months. We've started really doing work in this since March. And a lot of it is looking at the changes, and I think Catherine kind of hit on it, redefining what's large cap and what's small cap, what's growth and what's value, and that's kind of key. One of the things that investors want to make sure about is that they're not offline relative, as they wake up on Monday morning, that they're offline with their portfolio holdings and their sector weights relative to the new benchmark. And so people start looking at this very early on to try to get back into line, or at least know where the bets lie come Monday morning.
Nick, let's address how the rebalance affects two of Invesco ETFs, EQUL and OMFL, which rely on the Russell universe for their underlying factor composition.
Yeah, these are important. This is an important date because what's going to happen is that the universe is going to change. You're going to have kind of migration in and out of the Russell 1000. So that's going to impact those names that are essentially drawn into these ETFs. I think in the case of EQAL, it's pretty straightforward because you're just, weighting the sectors equally and then weighting the names in the sector. Where it gets more interesting is OMFL, because there's going to be a lot of kind of down impact that's going to happen, because what's going to occur is that the factor-based indexes that essentially drive OMFL are going to be reconstituted also. So not only does the universe change, but what is defined as momentum, what is defined as value, what is defined as size, that's all going to get recalibrated based on the screens and the new universe. So it's going to have a big impact on kind of the names that are present and the factor exposures that are going to be present in OMFL going forward.
Catherine, what are some changes we can expect for this year's reconstitution?
Well, the total U.S. equity market capitalization represented by the Russell 3000 index as of rank day increased 52%, rising from 31 trillion in 2020 to almost 50 trillion as of this year's rank day. The large end of the U.S. equity market grew significantly in the last year, with the total market cap of the Russell 1000 growing 50%. The small cap, the breakpoint between the large cap Russell 1000 and the small cap Russell 2000 increased by 73% from 3 billion last year to 5.2 billion this year. And also in the smallest company in the Russell 2000, has grown from less than 100 million last year to over 250 million this year. So as you can see, it's been a growth story, a story of recovery overall in the markets, large cap and small cap. And in fact, small caps and value companies started to outperform, leading their large and growth counterparts beginning at the end of 2020. So it remains to be seen how that will continue to shake out, but that's why it's important for these indexes to be reconstituted annually on a regular basis so that we're capturing these changes in the market.
So Ed, when you hear these kinds of numbers, whether it's notional, whether it's size, it's volume, what's that moment like for the Nasdaq Closing Cross? Is it all hands on deck?
Yeah, so if you look at the day in the life of Nasdaq on Russell is, I mean, obviously there's a busy opening, and everyone knows this day is really well advertised. And there are a lot of people out there that are either indexers that need to either, remove liquidity by selling out of, stocks that they're in, or remove liquidity by adding stocks that are being added. Whether it's a low, mid, or high cap stock, it's kind of, we don't distinguish between those in terms of how we treat the orders. I mean, our role in this is ensuring that everyone has confidence in the process. Everyone has an equal opportunity to participate in the trade, with regards to when we give notice to the street that, symbol ABCD, there's, 1 million shares paired off, but another 500,000 to buy. That those indications that are given, indicate to liquidity providers, that we need you to step in, we need you to, participate and provide liquidity. In addition, if you look at the close, when we think about transparency, it's not a good old boy club where only certain folks get access to certain information. I mean, that information is out there on a public, on a data feed. It tells everyone, the symbol, the side of the imbalance, the shares that are paired, the size of the amount, and then we give an indication of price. And what we hope is happening during that period is if someone sees an indication of price they think is, out of line, they may come in with, more aggressive orders, or that, the market has already done its thing and, price this cross efficiently and where that liquidity needs to go to arrive at that price. But, we basically have a busy opening. Everybody kind of sits around all day, and yes, we are fully staffed, to, give the street confidence that, we're there to answer any questions. But normally it's a fairly slow day during the middle of the day. And then there's this big event. And as I said, you blink your eyes, you miss it. I mean, it's 1 second. The market makers and liquidity providers are really busy gearing up all day for it. They know what's happening at the end of the day. They see the information, they respond to it. And, we're there to, hold hands and answer questions, but usually a pretty uneventful event, other than, the amazement and really a shout out goes to all the technology people that have developed the technology and the ability to, handle these, amounts of volumes in a manner that they do and as efficient as they do.
Stephen, a couple questions for you here. We spoke about this last year, and of course, going through the pandemic, it was a bit of an anomaly. And you had mentioned that active versus passive or just indexing, it really was an active managers market. Is that still the same for 2021? Where are you looking for exposure?
Boy, it's been a really choppy year for active. Overall, active has done a really good job, but they started the year poorly. They're having a tough time in June, and there's a lot of things going on in terms of what the meme stocks are doing and kind of the impact on performance. And so with that, we have active managers performing well. It's just been a really, really choppy situation. I do think the backdrop gets much, much better for active when you come out of a pandemic or out of a recession or out of bear market and you get some crazy moves. Managers are going to miss a lot of that activity. Going forward, though, I think you do have an opportunity to add alpha. There's not, it's the market has sort of treated every stock as like they live another day. And now we have this sorting out process as we go forward. If you kind of go back to what happened after the tech bubble corrected in 2000, it was 3 good years for active managers, and maybe they're not as good as we see going forward here. But I think you've got a real runway for adding alpha here. So we've been pitching the idea about being active down cap. It makes the most sense at this point.
And Nick, we'll wrap with you. I'll ask you the same question along those lines, since you are looking at so many different factors, asset classes, different styles of investing. What are you looking at?
Well, we're really seeing a lot of interest in the smarter ETFs, OMFL, for example, where what's going on underneath is there's just a systematic rules-based process for picking the stocks. And as we're talking about today, though, there's reconstitution, rebalance. So it's not the same stocks. They change based on what's going on in the marketplace and how the screens are met. And I think what you're seeing is the ability to really get very specific exposures, get it in a very transparent way, and really be able to generate kind of alpha or excess return to kind of your standard market cap benchmark. So we see a lot of interest across our ETF lineup because the offerings are essentially unique ways to get exposure to the market, and it's happening kind of below the surface, not those kind of well-followed market cap-based benchmarks.
All right, my Russell panel, great to see you as always. Hopefully we'll be back in studio for 2022 Reconstitution. Thank you so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.